Hey guys, this is Mr. Roxy coming at you from Palm Beach in Florida. I am back from my trip to Orlando, and Orlando was interesting. What a fun city that is. If you're going to Disney or something like that, if you're going to there to work, well, it's kind of the same as any other city, I guess, because you go in and you go out, and it's like people say, "How was Orlando?" And it's like, I don't know, I was working, man. Anyway, what I wanted to do today is not really discuss the fact that if you're an energy investor, you're down a Maserati or two for the day today as energy stocks get crushed. Why? Apparently because there's a new, breakout or lockdown related to COVID in Germany, as if Germany dictates to the entire world how much energy we should consume. Anyway, we should pay attention to the macro. Never forget what's going on in the rest of the world. Make sure you understand what's going on and make sure that we have an opportunity to know why the market sentiment or the manipulation, if you prefer, has changed for one day from one day to the next. So what I'm going to do today is I'm going to basically explore the concept of what can you do when the market crashes. So in simple terms, you could either do nothing, in other words, just hold your position, or otherwise you could say, oh my God, it's we're all going to die. Let's sell all our stocks. Or otherwise you can say, hey, you know what? Things are on sale. Maybe I should buy some. So what I thought today, what I would do is share with you some of the stocks that I was looking at, and let's take a look and see if we can make some. Let's see if we can get some daylight here, or whether this just remains clear as mud in terms of what you should be doing or should not be doing. So the topic of this discussion is 6 energy stocks. Are these 6 possible buys? It is March the 23rd. It is Tuesday. It is after 4 p.m. market close time. So let's take a look, not necessarily to see what happened to these energy stocks today, but let's see whether they are actually interesting at all and whether you should possibly look at adding these to your portfolio, or if you already have them in your portfolio, should you perhaps add a little more? Did you notice I didn't say sell? I said, should you perhaps add a little more, or should you perhaps add these to your portfolio? ConocoPhillips, COP, is the first one. It's one of the largest Permian producers and the largest US independent oil company. Oh my gosh, yes, it is even bigger than Occidental. Conoco's market cap is 71 billion, which is significantly more than Occidental. In fact, it's almost 2.5 times greater by market valuation than Occidental. Its combined production, though, is about 1.5 million combined, meaning ConocoPhillips with its recent acquisition of Continental Resources. Its production, approximately 1.5 million barrels per day. So even though its market cap is $71 billion, which is 2.5 times the size of Occidental, it only produces about not even 50% more than Occidental, which is currently running at about 1.2 million barrels per day. Interesting, huh? Concho reported Q4 results that beat Wall Street estimates in January. About TipRanks, one of my favorite sites, it ranks ConocoPhillips COP as an 8 out of 10, outperformed. Conoco's chart, you know what? The 3-month chart, I'm going to share the same 3-month chart for all of these energy stocks, looks pretty much the same. Hit a nice little high there of almost $60, now back down to $50. This was earlier on today, so I'm not sure where it ended today. It doesn't matter. Pulled back a little from that all-time high. Maybe there's a little bit of room for you to add some ConocoPhillips to your portfolio, or if you already have it, to add a little bit more. Also, a nice dividend of 3.29%, which is $1.72, expressed as an annual yield based on the current stock price of about $52. How about this one? EOG Resources. It is known as the Apple of oil because it uses technology and big data to aid it in drilling operations. It's got a $40 billion market cap, so almost 2 times the size of Occidental Petroleum. The company has premium acreage in the Eagle Ford Shale Formation and in the Permian. EOG beat analyst expectations when it reported Q4 results in February. Its production is around 440,000 barrels per day, which is up from 2020's 409, so less than half of the production of Occidental with almost 2 times the market cap, ranked 8 out of 10 on tip ranks as an outperform. Let's look at the quick chart here. It's pulled back a little from its 52-week high. So maybe there's a little space for you to add some. Again, I'm looking at the 3-month chart. Most of these look sort of similar. But look at this, held by institutions, 88%. This is an institutional favorite, EOG. If it's an institutional favorite, it's probably not a favorite of mine, but that's a separate issue. How about this one? Exxon Mobil, the world's largest publicly traded oil company with a market cap of $240 billion. That, in case you hadn't noticed, is 10 times the size of Occidental Petroleum. Exxon also doubled its holdings in the Permian Basin, and it is currently producing volumes of approximately 700,000 barrels per day. Sorry, it sees volumes of about 700,000 barrels per day by 2025. Their earlier prediction was about 1 million barrels per day. Tip ranks Exxon an outperform 10 right now, 10 out of 10. So they're saying buy, 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 buy. Just in February, a few weeks ago, Exxon reported mixed fourth quarter results. So look at their 3-month chart. It looks the same as everybody else's. Huge, fat, juicy dividend at 6%. That's $3.48 based on its current share price of around $55. It's also pulled back from its recent highs of around $62. So maybe there's a little bit of room to add the big giant Exxon to your portfolio. Pioneer Natural Resources, EXD, is a pure play Permian Basin company with a market cap of $35 billion. Just in October, a few months ago, Pioneer reached a deal to buy Parsley Energy in an all-stock transaction valued at $4.5 billion. It has approximately 928,000 net acres in the Permian, and in its Q4 results beat the analyst estimates in February. Sees capital spending of about 2.5 to 2.8 billion this year and production of around 528 to 554,000 barrels per day, with a market cap of about 50% greater than Occidental. It produces approximately half of the production of Occidental. So you get, there's a theme going here, right? So all these companies have a huge market share in comparison to Occidental, but only produce the same or less than Occidental on a production basis. The outlier there in terms of why there should be that difference at all, of course, is Occidental's debt, which, by the way, right now is manageable. Anyway, TipRanks has Pioneer Natural Resources ranked 9 out of 10 as an outperformed stock. Look at the chart again. There's a little bit of room for you to move there if you wanted to add some Pioneer Natural Resources. It's down from its 52-week high, but only a little bit. It was at $169, now trading at about $158, so down about $10. And once again, its chart looks pretty much the same as everyone else's. Also, sort of an institutional favorite, about 69% held by institutions. How about this one? This is a stock you've never heard of before. It's called Occidental Petroleum, or Oxy, a global corporation that has the largest acreage of anyone in the Permian with a market cap of only $26 billion. You'll notice TipRanks has Occidental ranked neutral, 6 out of 10. For a long time, it was stuck at 2 out of 10, so it's kind of gradually creeping up a little bit to the right, but we'll have to see how it goes. Of course, just the other day, Occidental reported Q4 results, which fell short of schmalist expectations. But it's okay. We know where it's going, especially with oil, even after the pullback at around $60 a barrel for WTI. Occidental is ka-ching printing money. And remember, it is producing approximately 1.1 million oil equivalent barrels per day. Not doing too badly. Occidental, let's look at its chart. The 3-month chart, a little bit more jagged, lots of ups and downs. And of course, every time it reaches a high, it pulls back and then it will go higher again. We'll expect to see the same again. I know some of you, in response to my question that I asked, should I change my name to Mr. Fossil or, whatever? And you said, no, Mr. Oxy forever. So I might just have to keep my Occidental stock forever too. That's okay by me. I'm in this one for the long term. Occidental's pulled back quite a bit. It's trading at around $26 from a high just the other day of $32. So you know, it gets close to the point where I say, like, is it time to add some more, or what should I do with Occidental? Short interest is only 3%. A couple of months ago, it was as high as almost 5%. But anyway, let's see where Occidental goes. Last one, Continental Resources. This is one I haven't looked at before, CLR. It didn't rush to gain any acreage in the Permian, but it is currently the largest producer in the Bakken. It has a market cap of $10 billion, or should I say, only $10 billion. It also reported mixed results in Q4, and it produces currently annually approximately a range of 160 to 165,000 barrels per day. So interesting one. This, you know, the market cap is less than half of Occidental's, but its production is like probably about 15% of Occidental's production on a daily basis. Former ConocoPhillips executive William Berry replaced Harold Hamm, who was the founder, as CEO just last year. TipRanks has Continental Resources ranked 7 out of 10, neutral, kind of similar to Occidental. Anyway, if you think William Berry did a good job at ConocoPhillips, then you might want to be interested in taking a closer look at Continental Resources. Here's its snapshot in terms of where it is right now. It's also pulled back a little at around $25 from its $32 high achieved just a short while ago. Its 3-month chart, once again, looks similar to everyone else's. In fact, in this case, more similar to Occidental. Guys, I'm going to leave you with this slide over here. You know, let's not get our panties in a knot when we see energy pulling back, especially when energy pulls back because there's an additional lockdown in Germany. Of course, we care very much about our German friends, but let's not allow the media to convince us that it's all doom and gloom and we're all going to die and nobody's going to have any food to eat and we're all going to go into a lockdown and COVID is going to cause mass destruction. None of that's going to happen. So if we look at the sectors in general, if you look at it over the past week, you can see energy has been taking a beating. Over the past week, energy is down more than 5%. In fact, it's the worst performing sector by far, even twice as bad as financials, which was only down 2.6% over the last week. But how about if you look at it over the last 6 months? Energy is a leader. It has given us a gain of almost 50% over the past 6 months as a sector, even beating the downtrodden and beaten up financials. So you know what? Energy not doing too badly. Things seem to be going okay. So guys, on that note, there's 6 stocks that you can kind of put in your back pocket and research and do a little bit of homework. And then you let me know in the comments, are these any of the stocks that you might think of investing in or not? Should we take a closer look at them? Should we stay away? What should we do? And do you have a favorite or a couple of favorites among those 6 that I mentioned? Let me know. And as usual, thank you for watching. If you like my videos, please subscribe. I would appreciate it. And it gives me motivation to keep doing what I'm doing so that you don't have to. On that note, this is Mr. Oxy signing off saying, keep well, stay safe, stay away from COVID, and take care. Bye-bye.